Everybody, this is John, and wow, it's about a little after 7:30 Central in the morning. Nasdaq futures are limit down. So what I want to do before the markets open, I'm going to hop in the room here when the cash session opens, is review our positions from the slam dunk and layup class session on Friday and plus the room. So one of the positions we talked about was Nasdaq futures. So we put those on Friday at 42.23. It was a little difficult holding on to them overnight, but the idea is that we might get a crash Monday. And the fact that we're limit down right now is good. Obviously, it's good if you're short. And then from here, we're going to just see what's going to happen when they take off the circuit breakers. Now, the S&Ps are not limit down as of yet. They're down 3.5%. The limit down portion is, I believe, it's been so long since I've dealt with limit down markets in the stock indexes, but it's 5% pre-market. So if it gets down 5% before the cash open, it will lock up. So just 5 contracts on this, pretty quick that way. And then the other trade that we did was just being long some VIX futures. And I think that was just 12 contracts, but I mean, they've moved up 20%. So based on that, see where those are, staying pretty healthy there. Okay, now from there, if we're doing a position review, we've got 3 sets of puts and 1 set of calls. So for Google, this is one that we did puts on pre-market so far, down about 30 points. And for this one, it's interesting now because you can see kind of the Theo prices pre-market. So that's turning into a pretty decent trade if we can stay there. The question on stuff like this, though, is always going to be like, all right, so at the open, does the market, just rally like a bat out of hell, and you just got to scramble to get out of these as soon as possible, and you're just going to get a horrible fill? Or is it something where the market's going to keep trending lower all day? Well, I can't imagine that the market's going to bottom at the open. It sure might be. It sure might. Got to keep in mind that there's a lot of large powers that be out there that don't want a market crash. So my plan is, let the markets kind of settle in the first 5 or 10 minutes and just take some off the table. I mean, there's nothing wrong with taking some off the table. The other one we did was Buffalo Wild Wings. This is a long that I kept. This one doesn't look like it's going to be doing too hot today. On this one, got a debit spread. So I may end up just buying the short call back. And if the market at some point is going to bounce, Buffalo Wild Wings has actually been holding up pretty well. And maybe people will want to go there and drown their sorrows later today. And then the other one was just Netflix. And on Netflix here, these puts, the 105 puts, gosh, we're trading down 10 points. I think that's the Theo price, so they may open up a little bit more than that. So we will see on that. All right, so that's kind of what we got. And the big thing here that's going on at this point is, again, Nasdaq futures are limit down for the first circuit breaker pre-market. Again, that's at 5%. And S&Ps at this point are not. And we'll be doing this at the open to kind of see how things are going. This is part of why VIX futures are also attractive, because as far as I know, there's not a circuit breaker on those. That's where people are going to be panicking and going to hedge and stuff like that. If we take a quick look, I kind of want to document where the markets are pre-market, and then later today I can finish the video and then do the post-market kind of snap. So S&Ps, you can see we're in this fire line here. And, question is, well, is this going to hold or not? Well, keep in mind, there's a daily squeeze here and a weekly squeeze. And support levels typically don't last very long under that much pressure. Okay, so I just anticipate that to be the pause that refreshes. If we look at the NASDAQ on a weekly chart, we're just blowing through everything. You can see that 41.27 level did not hold up well at all. In terms of minor support, 39.48. But this is something that could get going pretty nastily. And if we look at the Dow futures, of course, those are also selling off about the same. I haven't even looked at the Russell yet. Of course, that's not quite true. Yeah, there we go. Bam. Big key stocks like Apple down 6% almost. Okay, that's pretty big. Let's look at the dollar index. Wow, dollar index just getting rashed. So the dollar index is going down and oil's going down. Oh gosh, there's blood in the streets in the oil industry. Bond markets not up as much as I thought they would be. Of course, they did slam into some resistance there. And the gold market, extremely quiet. I'm sure all the gold bugs are confused by this, but it's not going down, so that's part of being a safe haven there. All right. So that's kind of the main stuff there. I'm trying to see if there's anything else. Nope, that's it. So I just kind of want to record this before the market opens, just to kind of get a sense. My overall plan at this point is I think we're going to see kind of a crash day. I don't know what that means in terms of where the S&Ps are going to set. Are they going to end up down 100 points? To me, it would make more sense that they'd be down 100 points than, say, reverse and go positive. But I also know that there are powers that be, central bankers, et cetera, that do not want a crash to happen. Okay, so are they going to come in and intervene? Well, so what I'm going to be looking for then is I want to stay short unless and until I see some consistent tick readings above plus or 800. Plus 800, plus 1,000. That means that there's some buy programs coming in, okay? And if they're sustained, that could lead the market on, I don't know if you guys remember, I think it was 2011 or so. There was like one day where the S&Ps did a 120-point reversal, and the whole time that happened, the ticks were plus 1,200, plus 1,300. So it's kind of easy to see when they do that. The tough part is just going to be, okay, we've got these profits and our shorts, the short positions. Do we just take the money and run at the open, or just try to sit on it and be patient? So that'll be the challenge. And that's, it's kind of, if you guys have seen the movie Top Gun, it's like, gentlemen, this is what you have been training for. So here we are. All right, guys, this is the rest of the free video, part 2, and now the markets are closed. So how did today end up? So overall, I'll review the day here in a second, but obviously it was a great trading day. So S&Ps, that's already reset, so it doesn't show profits from earlier today, but NQ, nice. The VIX was actually really nice. That's already been reset. YM, actually that was for some intraday trades. They got stopped out. Google was great. Netflix was great. Spiders were great. And all in all, a very solid day. The frustrating part was this morning. The profits were humongous, but it was really difficult to get out of trades. And so if we look at what happened, where is this morning? So this morning, we pretty much opened up a limit down across the board for the first 5 minutes, and then from there it just pretty much rallied, and it was actually impossible to get out of trades here. At least it was for me. Combination of quotes, platforms, fast moving markets, etc. By the time we got out, I think it was like around here, which was fine. That was still plenty of money. The one thing, though, that I noticed, and this is what we're going to be watching really for the rest of the week, was right here. And in this kind of market, I think it's good to be kind of light overnight, meaning be mostly cash. But look at this. The ticks were getting slammed, minus 800, minus 800, minus 800, and here we were trading sideways. That is the buy signal of the century. And at that point, we got out of the last of our shorts and just started looking at longs. Because guess what? If at minus 800, the stock market's not going down, well, first of all, I think it means it's being propped, okay? But I don't know that for sure, right? Just my crazy guess. Then as soon as the selling pressure relents, the market's just going to go straight up. So this was actually the funnest trade of the day, catching this long. We just bought calls on Netflix and bought some S&Ps. And then from there, I took a break, because at the end of the day, making money in these kind of markets isn't the big challenge, it's keeping it. So I missed this beautiful move because I stepped away from my desk, went for a drive, but then caught some nice stuff at the close. So anyway, just for tomorrow, the idea is to stay light and just keep an eye on the ticks. The ticks will tell you all that you need to know, all right? All right, so for those of you, if this is the first time you've ever experienced this kind of market, you've got to get a handle on volatility. If I have questions on volatility, I ask Don Kaufman. He is going to be doing a quick $97 2.5 hour class on Wednesday to help get everybody up to speed. Survive and thrive in extreme markets, strategies, and hedging to combat volatility. So simpleroptions.com/risk. He's going to be talking about why volatility creates opportunity and where do you find the opportunities. Today, this morning, before the market opened, I was asking him some questions specifically on option strategies. Like, look, I'm going to be buying some options here, but because the IV is going to be so high, which one should I look at? And then also, when I'm placing orders to sell them on something like this, he's always like, look, just place the orders, put them above the ask, because people are going to want to buy back those puts at any price if they're short those puts. And that was great advice. So a couple of things like that. What strategies to use when the market is in turmoil, like it's going to be, to cash in on the opportunity. How to control your portfolio's risk while maintaining upside potential. Okay, risk and reward obviously go hand in hand. And then one of the big things here is how to prepare for a volatility crush, because the whole idea with this kind of market is the expansion and literally crushing of volatility. And if you don't understand how that works, then none of your trades are going to work out really well if they have to do with options, whether you're long or short. And then, are you exposed? What hidden risks do you have in your portfolio? You want to be able to sleep well at night, okay? And a ton more. He's a wealth of information with this kind of stuff. This will be this Wednesday evening. If you can't attend, that's fine. It'll be recorded. It's just a $97 small investment to make sure that you are on the right side of this market. Okay, simpleoptions.com/risk, and it is this Wednesday night, and that starts at 8 o'clock East Coast time. Okay, hope it helps. Well, I know this will help. This is a must-attend class if you're going to trade these type of markets effectively. You guys have a fantastic evening, and we'll see you at the next update.